We're talking about 5 ways business owners can get into a home. I'm Kelsey and this is Missy.
Hi, I'm Missy with Intercap Lending. I'm a loan officer here.
Our first strategy is bank statement loans. This requires you to have 12 to 24 months of bank records. Missy, what are the pros and cons of this?
So there's lots of strategies, and bank statements is probably one of the most common. So the benefit of using a bank statement over a tax return is we are looking and analyzing their actual deposit. So when someone's self-employed, it's normal to write off the majority of your income. So that's where it becomes challenging. But in a bank statement, we're seeing basically all of the gross deposits going into the account. And we're using that plus an expense factor, but the expense factor is generally lower than what someone shows on their taxes. So we're able to usually use more income using 12 to 24 months bank statements versus a tax return.
Another option is a DSCR loan. How would you compare that to a bank statement loan? What are the pros and cons of that option?
A DSCR loan is primarily used for an investment property. So that's a little bit different. Usually we're using bank statement loans more for like a primary residence. A DSCR is really helpful in a situation where they're buying an investment property. We're using just the rents on that property to make sure that cash flows. So the rent versus what the actual mortgage payment's going to be. And we don't have to get into tax returns and things like that. You generally need a higher down payment, and the interest rate and closing costs tend to be a little bit higher, but it's still really great for an investor that can't show tax returns, or sometimes investors will just own multiple properties and the documentation is overwhelming. So a DSCR loan is just minimal documentation and can get them into investment properties.
Another strategy we like to use for business owners is asset depletion loan. What are the pros and cons of this one?
So an asset depletion it works really great for someone who, again, is self-employed, writes off all of their income, but they've got really good assets. So there are a lot of people that fall in that category. And it depends on the type of loan and the type of client. Their age sometimes is a factor, but they can take those assets and we can convert them into income. So again, eliminates a lot of income documentation, but also just as a way of getting them to qualify if they've got a lot of assets, but not a lot of income.
What kind of assets are valuable for this type of loan to get that qualification?
It depends again on the age of the client, and it depends on the type of loan. Some loans we have to use retirement accounts and they have to be of retirement age, but that's not always the case. So it's best just to reach out and we can kind of explore and see what options work for their particular situation.
Another option is a trust income loan. What are the pros and cons of this one?
Trust income is similar to using asset depletion. So if we have someone who has a trust set up and they have assets that are in the name of the trust, and again, it depends on the type of loan and there are some different requirements, but a lot of times we can take the income that's in the trust. Sometimes people have distributions set up that they take out monthly a certain amount. We can then turn that into income without getting tax returns and things like that. So it's just another way that eliminates using tax returns and can get them qualified using assets that they have.
Another strategy is a non-QM loan. What are the pros and cons of this strategy?
So non-QM is just a type of loan that's not traditional, like a traditional conventional type financing. So there are a lot of things that even a bank statement loan would be considered a non-QM. But one other type of non-QM that we can use for self-employed individuals is using just their 1099 income versus using their actual tax return. So a lot of self-employed people get a 1099, which is their gross income, but then they write off a lot on their tax returns. And we typically, if we're using a tax return, have to use the net income. But there are some non-QM options where we can use the actual gross 1099, similar to how we use the W-2 on a wage earner, W-2 type employee. So there's just a lot of different options that that we can look at when you're self-employed. So, I mean, the key is to just not feel like just because you're self-employed and you write off all of your income that you can't qualify for a loan, because there are a lot of options.
Yeah. I hear so often I'm self-employed or I'm a business owner, so I can't afford to buy a home, and those people are staying stuck renting. The key to this is to just reach out so we can create a strategy for you.
Yeah, I mean, I think the key is, like you mentioned, a lot of people who are self-employed feel like there's just no option for them. And especially if they know how they file their taxes, maybe they write everything off, or a lot of self-employed people even show a loss on their income. So they may have had challenges in the past qualifying, and if they continue to file their taxes that way, they're going to feel like they can't qualify for a loan. But like we've mentioned, there are a lot of options out there for self-employed people. So the key is just to reach out and talk about those options, explore each of those options, because everyone is very different. Everyone structures their business different. And then we can also talk about just maybe some strategies that they could work with their CPA based on how they file their taxes, and if they're preparing to buy a house in the future, that maybe they could be less aggressive on taxes. But that's something that they would obviously have to discuss with their CPA. But there are things that they can do when filing the taxes to make it easier, maybe if they're preparing to buy a house in the future.
Yeah, buying a home is all about strategy, right? And it takes an army for all of us to get there. There's no one size that fits all, so it really is about strategy and
just thinking outside of the box and finding what works for each individual person. So
I'm Kelsey. If you're looking to move here, I'd love to help you achieve your real estate dreams. Give me a call or shoot me a text. Let's talk about your real estate goals. Subscribe down below to stay up to date on our new content coming out every single week.